This episode of Life Accelerated is brought to you by Equisoft, a leading global provider of end-to-end cloud-based solutions with deep domain expertise in the life insurance industry. To learn more, visit equisoft.com.
AI can do everything, but most companies need it to do something, and in most cases, something really specific. And the beauty of what we tend to do at OutcomePath is to identify those specific problems and then build in the mix of orchestration, automation, machine learning, and usually at the very last stage, thin slices of AI to make those problems better for our clients.
I'm Olivier Lafontaine, and this is Life Accelerated, the podcast for life insurance leaders focused on driving meaningful change through technology, process, and partnership. In this episode, I talk with Adrian Webb, Executive Chairman at OutcomePath, a longtime financial services leader who spent his career reshaping how insurance works. From launching one of the first internet-based insurers to his role at GoCompare, Adrian has been driving industry disruption for decades. Now at OutcomePath, he's helping insurers rethink operations through orchestration, automation, and targeted AI. We dig into how AI can enhance decision-making, what linguistic analysis reveals about fraud and customer behavior, and why trust and authenticity remains the industry's biggest hurdles. Adrian also shares his take on near-term efficiency gains, the risks of generative AI, and why the future may require a total rethink of competition in a dead internet world. Let's get into the episode. Good afternoon, Adrian Webb. I am happy to have you on the show. What I'd like to do to start with is talk a little bit about one of the things you do that is not related to your work, which is apparently you have streams on Spotify for helping people sleep. So I'm intrigued by that. And why don't you tell us a little bit more about that?
Sure. Well, normally I'm a jazz guitarist, so I've been a jazz guitarist in a band for sort of over 20 years. And literally just 2 days ago, I was playing jazz at an audience just south of London. But I decided that putting jazz on Spotify was not going to sell anything. So what I decided to do was to create a piece of music that would put people to sleep. Sleep problems are a modern epidemic. But actually somebody in the 1800s worked out a way to help people sleep better using sound. And that involves presenting two different sine waves through headphones to each ear. And the difference between those sine waves can become what's called a 4 hertz theta pulse, which is the same pulse as your brain naturally settles into as you're going to sleep. So you'll notice that when things are out there in the world at frequencies, the body tends to try and sort of resonate with those frequencies. It tries to entrain, because otherwise there's what they call a moire pattern in there. And I created a piece of music that basically allows the brain to entrain itself into the brainwave that it would normally adopt in the process of falling asleep. And it seems to work, because so far 1.3 million people have had a listen to it, and I've earned enough to buy a small sandwich.
Oh, that's amazing. Yeah, I know Spotify, unless you're a Taylor Swift, the odds of making a living out of it is not fantastic, but nevertheless fascinating. And I'm actually going to try it in the next couple of days to see if it improves on my sleeping. We have a lot of difficult projects these days. So,
well, just promise me you won't operate heavy machinery while you're listening to it.
Okay, well, I'll keep that in mind. On a more business note, can you tell us a little bit about yourself, your background, and what led you to, from building an insurance company to developing AI solutions? So tell us a little bit about your background.
So I'm very lucky that I've had a lifetime in financial services, and most of that lifetime in the insurance world. But with all of the companies that I was with, they were sort of mold breakers. So the company Direct Line was the first direct insurance company pretty much in the world. And it was the first company in the UK to use an automated call center. It was the first company to use computers to underwrite a sort of basic personal lines insurance. So I had 6 years at that company, then 2 years with Richard Branson building sort of a very innovative bank using the Australian model of offsetting savings against borrowings. And then 13 years building an internet insurance company from literally nothing to a stock market flotation in 2013. Very lucky to do that. And from then actually moved, you would call it in Britain, sort of poacher come gamekeeper, or in this case, gamekeeper become poacher, where I moved to an aggregator company. I became the board director of a company called GoCompare that sort of disintermediates, direct insurance by actually presenting prices transparently to consumers. Very disruptive. So I've always been lucky to have that sort of been at disruptive companies that have changed things as they've gone along and shaped the world of insurance. And it's really through, as everybody's life story is, you spot problems during your own life and you hope to solve them at one point during your life by changing the world or by changing the way you behave yourself. And that's what I've been doing for the last 3 or 4 years, is trying to take the pain points that I suffered in my world, in the insurance world, and trying to find some workable, practical solutions to those problems.
So what are some of those pain points, as a matter of fact, that you've noticed in your career? What would be key ones that you can think of right off the top of your head?
Well, interestingly, Olivier, the pain points that I experienced during my career, many of them got solved during the course of that career as technology changed. So very often the mediation of the pain is the mediation of technology coming along to do it. So when we started eSure, it was very much using the internet to cut the pain of people not wanting to phone up about their insurance. They really didn't want to do it. It was like phoning up the dentist, knowing you're going to have to go and have a painful filling. And so the internet gave people a way to sort of back away from speaking to somebody on the phone to entering all their details online. So in that case, technology solved an initial pain point for the consumer, and it also increased efficiency for insurers. The pain points we're seeing now, I think, are very, very different. And we're going to say that the acronym AI many times probably during this call. But what AI is doing is it's developing a whole set of different pains for the insurance industry. The biggest ones are the ease with which fraud can be committed, and certainly in personal lines insurance, travel insurance, home insurance, car insurance, enabled by generative AI. Other pain points are, how do you maintain good customer relationship management when the inboxes of those people that you used to be able to email and get responses from is now so full of AI-generated junk that they've stopped responding to everything. And they still don't want to talk to you on the phone. So you've started to get relationship issues that are being caused by what the experts call dead internet theory, by the fact that there's so much good stuff out there, but we don't know whether any of it has been generated by a human or just by a prompted AI. And that is causing people to sort of almost revert to what you would call a trust economy of actually sort of meeting people and knowing that they are talking to a genuine live human being, not an avatar or a deep fake or a website that's been created by somebody in their back bedroom using a multi-agentic AI. It's a new set of problems.
Yeah, that's fascinating, because when you said, AI is causing problems, typically we think that AI, or sometimes we hear AI is technology looking for a problem to solve. But I think AI, the idea that AI itself causes problems through cybersecurity challenges and attackers using generative AI to enhance their capabilities, that's a good point. That really creates a new set of issues for insurance companies, but companies in general, of course. If we talk a little bit about your current company, OutcomePath, can you give us a sense for what you do and what problems you solve with the technology?
Well, interestingly, people often refer to us as an AI company, and yes, we do. But mostly what we do is try to only bring AI in very thin slices. And the reason for that is that anybody who's watching knows anything about AI will know that the bigger the amount of information you give to AI to process, the worse the outcomes tend to be. There's more range for hallucination and everything else. So giving AI very specific, thin slice problems, very well defined, it's able to increase the cadence, the speed with which intelligent decisioning can be made. But it's only accurate if you narrow that down. So a lot of what it is actually orchestration and automation of processes that previously had to come out of a system and have a real person look over a spreadsheet or look over a piece of paper. A lot of that decisioning is now possible with AI if it's constructed in the right way. But AI can't do it all. AI can do everything, but most companies need it to do something. And in most cases, something really specific. And the beauty of what we tend to do at OutcomePath is to identify those specific problems and then build in the mix of orchestration, automation, machine learning, and usually at the very last stage, thin slices of AI to make those problems better for our clients.
And that's amazing. So more specifically, you've been doing things, I think, in the property and casualty insurance space in helping the broker or the agent walk through the risk analysis or ask questions and identify the risk rather than having it fill out very sophisticated forms. So why don't you, I find that very interesting. Could you talk about that a little bit?
Yeah, sure. And again, a theme we'll return to, I'm sure, in this is you've got to look at this from the point of view of human beings moving through the world trying to accomplish things. In quite a lot of property and casualty instances, there are complex physical assets, shipping containers, airports, football stadiums, farms, large factories that you can't just enter into a structured data form all of the information. It needs somebody to go and visit, walk around, and be a human being in that context to be able to understand what some of the risks really are. And what we then realized is that a lot of people put into that problem space end up trying to remember or write down everything they're seeing, return to the office and process that information into a risk submission for an underwriter. And the feedback I got from some very, very senior underwriters, people who've been doing it for sort of 30, 40 years, is when it comes to complex risks, specialty risks in particular, and some property and casualty, is the information the underwriter gets is never enough to give the best premium that he could give if he had the right information. And often it's the first broker to put the quote in, the risk submission in, that gets the price, but it might not be a very accurate risk submission. So all parties end up losing somewhere. So what we did was just say, what about if we knew what a perfect risk submission looked like for this particular underwriter, and then allow a broker to walk around a factory, walk around a farm, take photographs, record audio snippets, type handwritten notes, take a picture of a tractor, whatever it is, in any order. So asynchronous data gathering through any channel that's convenient for them in that moment, and have the orchestration process bring that information to say, where does this fit into a best practice risk submission for a particular underwriter? So often you end up with much more risk information than the broker could ever have gathered. And I'll give you a concrete example. I was demonstrating with the chief underwriting officer yesterday that if I take a photograph of a field of sheep and put it through a sophisticated sort of analysis, it can identify things like 3 of those sheep don't have ear tags on. And that elevates the risk of sort of cross-contamination if they're not properly tagged as livestock. And the field in the top right-hand corner looks like there's a bit of broken panel. That could cause them to escape onto a road and a car accident. So suddenly, the top-down processing that humans do of trying to interpret their world, AIs don't live in the world, so they have to process everything. And sometimes get richer information out as a result of that.
Yeah, and that's amazing. This being a podcast about life insurance, I thought, since our preparation conversation, I thought about a few scenarios, but I can think of how this would be really interesting in group insurance, for example, where a similar scenario where the agent would go around the company and ask questions, take pictures, and try to gather information in a way that would be a bit more unstructured and natural than if you were to fill. Currently, they fill certain questionnaires and spreadsheets, and that's transmitted over to actuaries who then price for the group. But I can see how we might have like a much more detailed view of the risk if a bit more organic, and perhaps these types of technologies can help in giving more accurate pricing or better pricing based on true risk, as opposed to today, a lot of it has to be standardized. So I can see a lot of interest there, don't you think?
I agree with you. I'm going to challenge you slightly there, if you don't mind. So one of the things I think is really interesting about the life market, and we've spoken about this before, but the life market, if you imagine that you could gather the information to have perfect risk assessment in the life market, is effectively, it would end the life market. Because the life market relies upon the fact that if you know who is going to die within the term of their the term of their insurance, if you had a perfect knowledge, genetic knowledge, to be able to predict that accurately, the market would cease to exist, because the market is about pooling risk on the basis of of imperfect knowledge. As soon as you have perfect knowledge, insurance disappears. If you know who is going to crash their car, who wants to insure that person, it becomes effectively self-insurance, because you have to charge them the premium that is the cost of the accidents they're likely to have. So I think for life insurance, instead of looking at more accurate risk assessment, although I take your point on group, but if it was an individual case, I would be using AI to make your customers live longer and to help them to live longer, because everybody who goes past the last day of the term increases the profit. But the customer's not going to be angry. He's not going to be like, I could have died and got more from this. Everybody wants to live longer. So there is actually an alignment of interests in life insurance with perhaps using AI to understand customers better and to educate them towards better, longer, happier lives. I think that is where the real value might lie.
That is very valid, and that's what Discovery is doing in South Africa and I think they've expanded in the US. They've sold their technology in the US and elsewhere around the world with the health devices to collect information and give you points when you go to the gym. And so they try to align their interest with your interest, because I think nobody is ever disappointed to have bought an insurance policy and then not have to use it. And nevertheless, I think you're right. Adding AI to the mix here to kind of align the interest of the insurance with the health of the client and longevity of the client, I think that's a great point. I do think in the end, in this, for underwriting and classifying, while I agree that perfect risk, that would be an interesting, perfect risk assessment and predicting perfectly who is going to die and who's going to survive, that I don't know if we're going to get there. But it is still interesting to see if we can pool the risk better, if we can create groups that are more refined than today, which is pretty large. We have an individual life underwriting. If we split groups in 10 or 12 different groups, then that's already a lot of work and effort for underwriters. If AI can support that work by identifying different characteristics, I think those are all fascinating things. And that's why it's interesting to hear entrepreneurs like yourself, technology that will advance this in the future.
The other thing I would add is that for life insurers, the next 3 or 4 years, a lot of the progress in the insurance industry is going to be about efficiency, because inefficiency in insurance companies tends to be systems that have places where information has to come out of that system and be seen by a human, then go back into that system. And we would call that the sort of operational compensation layer. Ideally, it would be straight through, but it has to come out and then go back in again. Efficiency is going to be, over the next 3 or 4 years, getting rid of operational compensation and actually finding ways to build intelligent decisioning that is pretty accurate into the core systems of the company, because then it's only electricity. It's development, and then thereafter, the incremental cost is electricity. But the incremental cost and the slowdown, the lag of things coming out of systems and having to be checked and then manually put back into systems, it actually there'll be an efficiency showdown. But I suspect this will be arbitraged out to zero within 3 to 5 years, that actually the efficiency gain is a very short-term one. But if you're competing hard today, you don't have those efficiencies. In the next 2 or 3 years, the industry could reshape pretty quickly if one player is much more efficient than the other, which is why I admire really a lot of the work that Equisoft is doing to bring that sort of in, to be able to increase that base efficiency of companies to an optimum level. In the end, it might be that they can all compete on an even plane, and then people will be looking for new differentiators to be able to get incremental value from their business. But at the moment, it's tooling. AI tooling is what everybody is doing. And so a lot of our work is really on automation, orchestration, AI tooling. Get the efficiency up, but it's not the long-term solution. It's just a short-term wave.
To keep up, basically, with the rest of the group and exploration. There still is, I think a lot of what we hear from private equity firms is demonstrating that you're effectively getting some economies, efficiencies, or doing more with your existing team by using AI. There's all the promises, and it's very exciting to see that. How do you translate that into numbers that can be presented to board meetings and things like that? That's what remains to be seen, I think, in a lot of cases, but it goes so fast that we have to move forward, right?
The long-term vision of a CEO in the life insurance industry shouldn't be thinking that AI is going to solve all our problems in 5 years. It's going to be saying AI will help us with some of our problems in the next 2 or 3 years, but then we're actually going to have to rethink what competition looks like in a dead internet world where people have stopped looking at their emails, where people are quite distrustful of stuff that comes to them through a screen because they don't know what is real and what's trust. Those sorts of trust issues, you notice how nobody's talking about blockchain anymore. Whereas if you wind back 3 years, every conversation was crypto and blockchain. It's sort of everything is now just AI. But, the trust economy was something that blockchain was meant to solve. And in fact, what AI has done is it's pulled the rug from underneath the trust economy because you do not know who you are speaking to. You don't even know whether I am real or you are real. We could be deep fakes, but we're not, folks. But we could be deep fakes. And it's really hard for people to know. Global CEOs have been fooled by these things.
That brings me to another topic that you've been talking about that I find fascinating, which is I've never heard from other people, but you talked about linguistic analysis as being, I think, a way to understand through the tones and I think the word selection that people make, interpret their state of mind or if they're lying or things like that. Can you talk about that a little bit?
Sure. And again, this is something which is sort of AI facilitated, but ultimately it really comes from people taking time to understand how humans work, how humans work in the world. And the one thing we know from linguistics is that I can sit here and lie to you, and I can use words that sound perfectly rational to our audience. And I can say, I'm actually the King of England, and I have slightly more money than Elon Musk, and I have a unicorn in the field. You can hear me saying those words in roughly the same way as the other words that I've said. But semantically, what those words mean, it's not true. You can tell. So the ease of lying is, which everybody says, well, it's actually quite easy to lie. We all do it all the time when we say, what a lovely dress, Grandma, or phrases like that to protect people's feelings. But ultimately, the language with which we frame even our lives comes from a community that we have grown up in and moved through and learn how to communicate appropriately with. Now, the problem with lying is a cognitive one, in that when I am telling you the truth about what I did this morning, I just read from memory. And I have very specific, what they call spatiotemporal anchoring. So, I was walking up the stairs when I saw the sock that I needed to put into the washing. I stroked the dog and then we did this. I've got that sequence because I'm reading it from memory. Somebody who is lying has to make up a continually growing snowball of falsehoods to be able to support the central deception. And in doing so, they start to exhibit linguistic changes. So you and I have spoken before about lexical density. So lexical density is the difference between the ratio of information-bearing words and sort of functional words that wrap around information-bearing words. So if I say to you, this morning the crash occurred at exactly 11:10, and I know that because I was looking at my watch and I was driving past, that has a very high lexical density. I'm giving lots of information. If you say, well, it sort of came out of nowhere and I'm not quite sure, all those words there's very few of those that bear information. So when lexical density changes, very often that people are drawing more on fabrication than they are on memory. And that's something that linguistics can use to pick up. It's not really an AI thing. And the reason I say that is because AI and machine learning and everything else requires huge pattern sets to be able to learn from. And in fact, cases of deception in things like fraud are actually very, very tiny slices of the whole sort of corpus of an insurance company's claims lines. And so what you do is you look to how do humans behave when they're lying. They have to make up stuff. Is making up stuff easy? No, it's really, really hard. How do we exhibit that in our language? We start to become more hedging. We use more words like perhaps and maybe and all that sort of thing. People tend to use those sorts of phrases when they are fabricating, but not when they are recalling from memory. And we've got a huge pattern of things like lexical density, semantic bleaching, hedging patterns, disfluencies, all of these things that tend to come out in dissection. And there's a corpus of knowledge about this that's been written over the course of 80, 90 years. So it's now fairly refined, but you can now use AI to do some of the final decisioning by recognizing, say, speech to text to enable you to tag the text and do it a bit better.
Would that be useful in the context of, let's say, a telephone interview for underwriting, for example, or fraud detection, during claims and those types of things? Is that the sort of application you would think would be useful or would be using this sort of technology?
Yes. The thing that all insurers are trying to get towards is real-time indicators of deception likelihood. It's the one thing. Now, what has happened so far is AI has sort of swept the board in lots of personal lines by doing sort of pattern matching between claims and policy inception over very large data sets. When it comes to being able to have an indicator of, does this person seem to be exhibiting the linguistic signatures of deception more than of truth-telling? That if you could indicate that live, what you do is not turn down the claim. You just say, here's the cohort of claims that we're going to pay a little bit more human attention to. We're going to look deeper at this set because those are the ones that have those indicators. It may well be that's just a nervous person. Mm-hmm. So you never use these tools to void a claim. What you use them for is to narrow where you put your focus so that you become much more efficient in protecting your loss ratio.
And you spend more time on those rather than sprinkle your effort across a larger pool of claims that might in the end not result in anything being flat, right? So I think that's really interesting in terms of improving efficiency, as we talked about before.
It's triage. It's exactly like going to a hospital and somebody says, is it a broken leg? Is it an internal pain? Which of these three main things is it a bleed? Which of those main things are they, and whereabouts in the hospital should we direct them? So real-time fraud detection is going to be like the triage nurse, who is not a doctor, but is able to divide up those presenting into categories where you send them to the doctor and says, the doctor says, no, it's absolutely fine, no problem at all. That's all good. But you want to make efficient use where not everybody coming in is having to see every doctor to decide what's wrong with them. You're triaging them early. And I think that is where claims efficiency, particularly as Gen AI fraud starts to become a real impact on our business, which I think across all insurers, everybody is afraid of Gen AI because insurance companies move much slower than the fraudsters who are using it.
I agree. And actually, insurance companies, but also there's a growing pool of scholars and experts that express some concerns over the growth of AI and the spread of AI in our day-to-day life. And I think to some degree you share some of that, or at least you're intrigued by that. I think you're a chair of philosophy of technology at Exeter University, if I'm not mistaken.
Yeah, I'm far from being chair, so I'm not a professor, but I'm doing my PhD there, and I do teach some of these subjects to young students. So it's an area that definitely interests me academically in my studies.
I thought that your point on the amount of things that can be generated, lies that can be generated with generative AI, and insurance companies being worried about this, I think that is a common theme in scholars and thinkers. You being a student of technology, of philosophy of technology, what are your thoughts in terms of the dangers, I suppose, for Gen AI, growing with not too much control around it?
Okay, the big issue with Gen AI is, if you think about the ways that large insurance companies have to operate, they operate in regulated environments. They operate within boundaries that are looked at by consumer regulation, by reserving regulation, the PRA, all these things. They are under huge scrutiny, which means that the process of making changes that are fundamental to their business will go through a lot of scrutiny before they go live. So the gestation period for changes that are systemic in an insurance company is years. It's years. The problem with Gen AI is that for £20 a month, somebody can sit in a back bedroom and can generate pretty good passports, pretty good fake photographs, pretty good, all those things. Now, that creates an asymmetry of ability between the insurance company that's trying to detect and the fraudster who, if it doesn't work, they just try again tomorrow. They can, if their new technology comes in, they can use it today. An insurance company, nobody's ever in an insurance company said, there's new technology, let's have it in by this afternoon. But that is exactly what happens in the fraud world. And so you have this ability of fraudsters to be able to knit together any microservices AIs, to knit together any multi-agentic thing. And all they have to do is test it and see if the weakest insurance company pays out the claim. And if it does, iterate. Keep iterating until they close that gap and then just use some new technologies to do it. An insurance company cannot operate in that way. So we've got this arms race where one side is developing sort of bombs to try and solve the problem that take a year to create, and the other side is going in with pistols that take them a morning to create. It's a major headache for everybody in the insurance world, particularly property and casualty, where evidence tends to come from photographs, from documents, from invoices. A lot of keynote speakers are making a really good living out of generating completely fraudulent businesses, and by the end of the keynote speech, they're already trading. It's so easy to do. But in insurance, it's going to be a while before that washes through because there's a discordance between the abilities of the two sides.
Yeah, and you're going to see frauds around disability, frauds around accidents, and all kinds of things that is going to get more and more difficult to identify the fakes, whether they're fake police reports and things like that. So insurance companies will have to adapt to that. And you're right, the speed at which the fraudsters are operating and the technology is evolving there is not at all aligned with the speed at which the insurance companies are able to adopt and defend against that. So it's a very difficult. And I think a lot of people have flagged this. I mean, a lot of industries are facing this, but insurance in particular, because of its very nature, is about managing risk, and so cannot make bold moves very rapidly. So it's an interesting challenge for us and providing tools to help with that.
If we could regulate fraudsters, the problem would solve really quickly. If you said each gang of fraudsters has to have a risk committee and an audit committee, and they have to go report to the regulator every so often, then there wouldn't be a problem. The problem is that as an insurance company, you have to do that, and it slows down your ability to be able to react to technologies that are moving faster than social norms, legislation, regulation, and the internal ability of big systems to be able to cope with them.
Yeah, and we get a lot of insurance executives on this podcast. It's actually interesting that now for this one, we have somebody that comes more from the technology and vendor side, although you do have some background in insurance companies as well. So it's an interesting mix. But a lot of the executives in insurance companies are a little bit stuck with trying to even understand what is happening and how to navigate. The CIOs are bombarded with questions. Obviously, all their employees want to use ChatGPT or Claude or Gemini. They want to be automating their workloads. They want to use this to be more efficient. Actually, there is a growing body of people that is expecting efficiencies to happen, and therefore it indirectly puts pressure on everyone trying to go in the Wild West and explore those tools. But what does it mean exactly? And we see these incidents from time to time happening. It's just going really fast, and it's difficult for the CIOs to navigate. So I agree with you. It's going to be an interesting next couple of years to see what comes out of this Wild West to defend and honor the duty of the insurance companies.
The duty of insurance companies. One of my colleagues at Exeter University, a doctor called Brunette Tyler, has written on the philosophy of technology quite extensively. And one of the things he points to is a writing from back in the early 1990s by an American called Werner Vinge, who said that one of the problems with increasing technological capability is that if we try to regulate very fast-moving technologies, then the unregulated versions will always outperform the regulated versions, which is fine in the pre-internet world because basically every country has its border controls to stop those technologies or regulate it. The internet cannot be controlled in that way. Certainly sort of China can seal off certain elements of it, but VPNs are everywhere. Everybody knows how to use them. You see everybody on holiday using them. So everybody who says, I will subscribe to a regulated technology is going to subscribe to a slower technology that moves less fast than the unregulated version. And one of the things that my colleague has said is that the problem with that is that it means there is always a pull in capitalism towards the unregulated technology, because that will be faster and it will generate incremental profits over those who are using a regulated technology. And that's a real problem it's a problem for ethics, but it's a problem for governments. And even if one government brings it in, what they'll do is they'll hobble their own country compared to another country that's operating in an unregulated way, as we've seen with North Korea.
Yeah, 100% agree. So listen, it's fascinating. I think I really enjoyed the conversation, Adrian. Perhaps we'll have a chance to explore these topics further. It would be nice if perhaps in 6 months you can join us again for a follow-up on what has happened in the next 6 months. I find... Well, if I said this 6 months ago, I think we would have found that there's a lot that's evolved. Now, these days, we're talking about agentic AI, and agents are a big thing. Who knows what's going to happen in 6 months? But yeah, really enjoyed the conversation. Thanks for your time.
I really enjoyed it. And, maybe we should put in for next week, given the speed of change, but we'll see.
Yeah, agreed. Thank you.
Thank you, Olivier.
Adrian's career has always been about solving problems in insurance, whether by challenging the status quo or applying AI in practical ways. What struck me the most was how he balanced short-term efficiency with the long-term challenges of trust, fraud, and rising competition in a digital-first world. From rethinking risk assessment to using language analysis for fraud detection, Adrian proves the progress in insurance demands more than just tech. It takes an understanding of people too. Thanks for listening.